Welcome back. To understand the next two trade types, I thought I would look at any old chart again and kind of walk you through it, and then we'll add the dots and you'll be able to see what I mean. Okay? We can all agree that the market, let's move to the right so we can really see this, okay? The market has made a new low here, right? And that's going to be an exhaustion point. We'll see some dots. Then the market comes down, tests the low, and actually moves to make a brand new low right here, okay? Then the market comes down here and tests the low again, but it can't make a new low. It fails. It makes a higher low. You see? There's the low, and there's the higher low. That is a failed swing level. Okay? That's what we're calling a failed swing level. Right here, it comes down, makes a new swing low, but it's higher than this one. That's another failed swing level. Okay? So we could have a counterpunch, a set of dots that's a counterpunch here. We have a failed swing level here. We'll call that level 1. We have another failed swing level here. We can call that level 2. And then we have another one here. Don't need these EMAs. All right, so this would be your lowest one, right? This is lower than where the two dots would be to the left. But then these aren't. These are higher. Level 1, level 2, level 3. And then finally, we get a level that makes a new low right there. Okay? Then what happens? Then there's a new low. So at this point, we would be looking at the high swings, right? So here we have a swing that's, we don't know if it's going to be higher than two groups of dots, okay? But it's definitely higher than this group, where this would be. But notice how when it tries to come up, it fails. And so this is going to be a failed swing level going down, okay? Here's another one. So this swing level, this is level 1, this is level 2 going down, you see? Now if I go ahead and put on the dots, you'll notice that this is a failed swing level. And while this is a failed swing level, we don't have dots, and that's because it did not meet the requirement of 3 lower closes. There's only 2 lower closing bars. All right, so the principle that you want to know is that when you have a group of dots, this is for long trades, okay, you have a group of dots that's higher than one group over, then that is considered a failed swing level, okay? On coming down, if you have dots that's lower than one group of dots to the left, then that is a failed swing level. Okay, and we're going to get trade setups from those. And the trade setups are going to follow similar rules. All right, let's take a look at this one, for example. It's going to be a red bar below the jump line, right, because we're going short. The red bar has to be on either the dot or up to 4 or 5 bars over to the right. The calculator is set for 4 bars over to the right, and that's going to give us a setup. We do not care what is happening on the high trend chop indicator. In other words, it doesn't have to come from blue to go short to red. Doesn't have to have the signal lines cross. With the failed swing trades, the various failed swing levels, we do not need the additional confirmation from the high trend chop indicator. We only need the confirmation for the counterpunch trades at this point in time. Now I'll talk to you about some additional confirmation that we're going to often refer to, but by and large the calculator is going to ignore the chop indicator, the high trend chop indicator, for this failed swing trades. And those trades are always going to be green. Okay? The counterpunch trades are going to be white. All right? So those are 2 of the 3 setups. There is a third setup. The third setup is a second chance failed swing level. What do I mean by that? Here's a good example right here. Notice that we have a counterpunch trade, right? Because this group of dots is higher than the two to the left. Now we may not have a trade, but we have the possible setup, all right? Over here we have a failed swing level because this group of dots is lower than one group over to the left. What about this group of dots? This group of dots is not higher than two groups over to the left. It's not lower than one group over, but it is lower than two groups over. Okay, so it's in between. That's a second chance failed swing level. It's a group of dots that is higher than one group over to the left, but lower than the second group over to the left. Okay? Incidentally, it could also be equal to the group over to the left. The whole idea is that it is not a counterpunch trade because it's not above two groups. And it's not a failed swing level because it's not below one group. It's above the first group but below the second group over. All right, we'll see more examples of this. These trades are going to show up as purple trades, and they can be very powerful. You do not need confirmation with the high trend chop indicator, although there are times when you're going to want that confirmation. All right, let's go ahead and put the calculator on, and we'll go ahead and analyze some setups. Let's look at this crude oil chart. This is the current April chart. This just happened yesterday. So looking for the first trade of the day, usually at 8:50, and you get a counterpunch trade. We know that because if we look to our left, we have our dots are higher than the two to the left. You see? We also have the confirmation on the histogram. We have the white setup. We have the red bar and a really nice trade, hitting all three targets. Okay? There's a possible counter trend trade to go long. You'll notice there are no targets, and that's because we don't have any confirmation on the histogram. Instead, we get a level trade, a level failed swing level trade right here to go down, okay? Because this group of dots is lower than one to the left. And notice that that comes all the way down and it hits the first target perfectly. There's another failed swing level. We're not going to take every single one, okay? We're going to be taking the trades that we're interested in based on our trade plan. All right, then we have a counterpunch to go long here because this group is lower than the two to the left. What about this group of dots? You see this group of dots? It's higher than one to the left, but it's lower than two to the left. It's in the middle. That's your second chance failed swing level trade, and it shows up in purple. Okay? You treat it the exact same way. We do have confirmation here, but we don't need it. It's always nice to have it, though. It makes it a stronger trade. Okay? And notice that it comes down, and it almost gets to the second target. But it's a nice trade. Definitely a profitable trade. We have another one here, right? Of course, we have a failed swing level. This is lower than one dot to the left. We have a possible counterpunch long because it's lower than two dots, two groups of dots to the left, okay? Then we have a group of dots that's higher than this one, but lower than two back. That's another purple trade. That's a second chance trade. Okay? It worked out pretty good. Almost hit that target perfectly, missed by like a tick or two. See? Right over here. Very important trades. All right? Those are the three main types of setups. Now, we have some special case situations, but I'm not going to get to those until much later in the training. So now that you know what each trade looks like, let's talk about the anatomy of a trade setup. How do we get to the targets? How do we get to the stop? How do we get to the entry? All right, so first let's talk about entries. Remember I said that when you get a setup bar, you either have to have a green bar for a long trade. Let's just look at this one. On or after the third dot, right? You need a green bar that closes above the jump line. This happens to be on the third dot, okay? It's a second chance trade because this set of dots is lower than the one to the left but higher than two to the left. Okay, you see it's right in between. Once you get your green bar, the typical setup is going to be 2 ticks above, plus or minus key level adjustments. Some plans we won't use key level adjustments and others we will. I'm going to save key level adjustments for later in the training. All right, so let's just say that it's 2 ticks above. So you can see the high is 24, the entry is at 26. See? How do we get to the targets? The target is an interesting calculation. We're going to take the lowest low of the bars associated to these 3 dots. So in this case, it's the first bar. And we're going to measure to the high of the setup bar. Okay? And we're going to call that measurement the X factor. 1x is going to be the first target. Well, it depends on what we set the calculator to, but typically 1x will be the first target, and we're going to add that to the high of the setup bar. Okay? So you can easily subtract 5105 from 5124, and that equals 19 ticks. Okay, now if you had to do that by hand, that would cost you valuable time, right? So the calculator is calculating that for us. This 19 ticks is the X factor for this one setup. It's going to be different with every trade. Each trade is dynamic based on the setup itself. Okay? The first target we've got set at 1x. That means this target is 19 ticks above the high of the setup bar. Okay, the setup bar is at 5124. Target 1 is at 5143, exactly 19 ticks above it. You see? The second target is 1.5x, unless we change it. We could change these targets, but this is our default setting. And the third target is 2x, which would be 2 times 19 ticks. Okay? What about the short trade? This is an interesting setup. Why? Because, notice, first of all, it's a counterpunch trade. Okay? You have a setup here, but it doesn't confirm until here. So the calculated trade is based on this setup bar. So it's measuring the high, the highest high of the group of 3 dots to the low of the setup bar. Okay? We don't get confirmation until 2 bars over. Notice that when we get confirmation, the bar is already down to here. Okay? We can miss this trade unless the price pulls up and hits the entry. Here it hit the entry. And you would take that trade on a limit order, on a pullback. Okay? Normally we're going to break out. We're waiting for the price to break out. Right? It has to go a certain distance, 2 ticks above the high of the bar. Here, it is 2 ticks below the low of the bar. The low of the bar is here. The entry's here. And the price has already moved down to here, and when that bar closes is when the confirmation closes. It's when we get the crossing over of the signal line. So we place our trade, and we have to hope it pulls back. Now, you may decide to place the trade 1 or 2 ticks below the entry, and that's certainly fine. That's part of the art of trading. Okay, you'll learn more about that as you go. But for now, let's just say it had to come up and touch the entry. Luckily, it did. So you're really not hitting the entry until that bar. Okay? But the measurements of the targets are shown on this bar where the confirmation is, but it's based on this bar, which is the actual setup bar. Okay? I want to make that clear so you don't get confused. Okay, so this looks like it might be a counterpunch trade because it's low, right? You look to the left and you don't see any higher dots. But if you look further to the left, you see lower dots. So this is not really a counterpunch setup. This is a failed swing setup, okay? Because the one group of dots over to the left is lower. So this is a failed swing. If it was a counterpunch, you'd still need the histogram to be in the red, okay? In this case, it's in the blue. But because it's a failed swing, we don't care about the histogram. And so 2 bars over is our first green bar that closes above the jump line. Remember, we don't know that we have dots showing up again because we have to wait for the 3 higher closes. Then these dots are going to show up. In the live market, you would just be seeing a green bar. And it's 2 over from the dots. Remember, it could be up to 4, even 5 over. Okay? Again, depending on how we set the calculator. I'll show you that in a bit. But the setup bar is your first green bar here. And the way that the calculator measures this trade is the lowest point of the 3 bars on the dots. So that happens to be the 3rd bar this time. Right there. So it's going to measure this low from the high of the setup bar. It's a much bigger trade, isn't it? And look at how nicely it came up and hit its first 2 targets and got pretty close to the 3rd. In fact, it even hit the 3rd right there. And look how accurate, right on that bar. See? You're going to see that a lot. These setups are dynamic. We have a medium-sized one, a smaller one, and a bigger one. And they're all perfectly calculated to the actual trade setup. I think you're going to be amazed the more and more you see this in play. Of course, we have now another failed swing level. Notice that this one is bright green and this one's in dark green. The reason why? The bright green one is the one that the calculator is tracking. The dark green one are additional setups that we would trade manually. Those are good trades too. Look at how the middle target barely got hit. Obviously, trends will come to an end at some point. Even the 3rd one got to the first target. You see? The 4th one, obviously, did not. But I'll give you a clue. When you're deep in the blue, and you've seen a lot of setups coming up, that would be a clue to maybe start avoiding long trades. Now, the only exception is when we put on our moving averages and we have a very clear, strong trend, and you could see that. Okay, and we're going to talk about that as we get into the finer points of the strategy. All right, so we've talked about entries, we've talked about the targets. Let's talk about stops. The stops are very easy. 2 ticks below the lowest point. Remember, we're taking the lowest bar of the 3 dots, and that's what we are using to measure our targets. We go 2 ticks below the lowest point of those 3 bars associated with the dots, right? 2 ticks below that is where the stop is. And you'll see the stop right here, this little green dot. It's the same place as our 3 dots. That's how that works. On the next trade, right here, we don't see a dot down here below the setup bar because trade tracking is off and because the stop is where these dots are. You see, this stop is with these dots. The stop is in the exact same place. So you would just use these dots as your stop. Notice that it's 2 ticks below the lowest low of the 3 bars associated with the 3 dots. In this case, it's the first bar on the yellow dot, you see? In the trade prior, it was the green dot, the 3rd one. Remember, this setup bar here has nothing to do with these 3 dots. This setup bar here is from these dots. These dots is giving you the setup bar. Remember, it has to be on the 3rd dot or up to 4 to 5 over to the right. Okay? So make sure you don't get confused by that. But that's how the stops are. On the short counterpunch trade, it's the highest point of the 3 bars associated with these 3 dots. Happens to be the first bar. The stop is 2 ticks above that, plus or minus whatever key level adjustments we make. And now you know the anatomy of the basic setups that make up the counterpunch trader.